An extremely interesting note coming in from CLSA on ULTRATECH cement. CLSA has gone ahead and analyzed the annual report of ULTRATECH, and they have a couple of pointers that they are looking at quite closely. Number one, the proposed expansion plan of ULTRATECH cement. Number two, the ESG initiatives that the company has taken up, the debt position, the cash flows, as well as how return ratios could pan out going forward. What is it that CLSA has to say? Number one, they're saying that ESG is clearly coming out as a key theme as far as the annual report is concerned, with specific targets being set across most of the parameters. What they're saying is that the company that has issued sustainability linked bond issuances have actually lent more credence as far as the ESG initiatives are concerned. The other thing that CLSA is saying is that the company which is ramping up WHRS capacity, that is the waste heat recovery system capacity, also augurs quite well as far as costs are concerned. They are saying that ongoing capacity expansion plans are on track. Their analysis indicates another 35 million ton of expansion in various stages of proposal and approval, which would strengthen its leadership position and its large capacity position as far as India is concerned. Given the fact that the company continues to generate very strong free cash flows, they expect ULTRATECH cement to be net cash positive by FY23, while according to CLSA, the return on capital employed, or the ROCE, is expected to rise by 90 basis points by FY24. What they're saying is that at this point of time, risk reward is largely balanced and therefore maintain their outperform rating. They adjust the target price slightly from 8,000 rupees to 8,050 rupees. Now, what is it that the company is doing? Number one, current capacity of almost 116 million ton will go up to 136 million tons. What they're saying is that most of the commissioning capacity is largely on track after going through the various filings that the company has done with the MOEF office. Also, what they're saying is that the detailed analysis of Ministry of Environment and Forest filings actually gives quite a bit of confidence as to the company actually being able to put up most of these capacities in record time. Now, also what they're saying is that capacity could increase by 45% over the medium term, thereby strengthening its capacity leadership. Now, what they're saying, balance sheet metrics have improved tremendously. FY21 debt fell to almost just around 7,600 crore, and FY20, remember, it was almost 18,100 crore. This is driven by strong free cash flow generation and the company's intent to go ahead and repay debt. They are seeing and forecasting ULTRATECH cement to turn net cash by FY23, and given the fact that they are expecting utilizations and earnings improvement over the next 3 years, they expect an ROCE of close to 21% by FY24, and this is something that actually makes them quite positive as far as ULTRATECH cement is concerned.